How's it going, everybody? Mitch Cleary here with Century 21 in Peterborough, and we're back for February with our market update. Sorry I missed you guys on January's market update. I did shoot it, had it almost edited, just about ready to go, and just missed the mark. I was a little too late on getting it out, and it was old news by the time I had it totally ready to go. February was a crazy month. We had a lot of different things going on. The market was crazy. It was a good month for business, and I was busy working with my new partner in business, Tamer Kamar, to get our team up and running, and things have been going great there. So my apologies on the January update. Now, to make up for it, I put a little bit extra research into this week's video. So here's what we're going to do is I'm going to do a quick gloss over of the stats for you guys rather than doing the total in-depth, because simply put, the numbers are crazy. There's just, you can break it down as many ways as you want, but there's ridiculous sales numbers going on right now, ridiculous prices. And I'm going to go over quickly what we're seeing boots on the ground. And then I'm going to spend the bulk of this video going over what I think is the most pertinent question in everybody's mind right now, which is, can this keep going? When does it stop? How does it end? What's the short and long-term future here if you're looking to buy? We know this market's great if you're a seller, but for everybody trying to enter right now, it's definitely a scary time. There's no doubt about it. So we're going to take a quick look at the stats right now, and then let's go on to some thoughts on the market's future. Okay, so as you guys probably know by watching these videos, that everything to do with price stems off of inventory. It's all supply and demand. The lower that months of inventory is, the quicker prices are going to rise. All of last year, we were carrying about 1 month of inventory, give or take, and every time that we saw that, we knew that, and it was inevitable, that major price gains were coming, especially when we started creeping down below this 1 month. It was just a matter of time before this explosion happened, because that's what is going on right now. For a long time, their prices were kind of on a real strong, steady gain, but it seemed somewhat linear. And in the recent months, the last probably 90 days, it seems to be more or less exponential, the type of gains where if you look at it on a graph, it just all of a sudden the lines just started to go straight up, and it's become almost impossible to predict what things are going to sell for on any given instance when you see a property with no competition out there and receiving 20 plus offers. So inventory is extremely low. It was extremely low in January, and it's still just as bad. It's 0.6 months of inventory right now. So we're just a little bit over 2 weeks of inventory. That means if no new listings came on tomorrow, that it would only take a little over 2 weeks to burn through every listing in the city at the current sales pace. Average days on market is 12. We all know the truth and reality of this market right now. You put a house on for sale, you hold offers for 7 days, that thing is gone. You're getting 10 to 20 offers. You're seeing large numbers of firm non-conditional offers. When we log into our system every day to see the activity in the city, it used to be a thing where you would see new listings, conditional solds, and then pending, just mean firm sale, pending sale. And now you basically just see new listings and then firm sales, because the conditional offers have almost been totally cut out. When you're in this level of competition, double digits amount of offers on every property, unfortunately for buyers, conditions have basically fallen by the wayside. So moving on, we got list to sales price ratio is 111% in February. And I think this includes everything, but if you look more at the more closer to the average purchase price, sort of boots on the ground and gut feeling, I think this number is really closer to like 120%. Because remember, this 111, that's including all the $1 million stuff and stuff at 800,000 that's selling way over too. But marginally, it's not going as much as an $800,000 house that sells 100,000 over isn't moving the needle on this metric as much as a $400,000 house that sells 100 over. So when you're looking at a property for the average buyer, if you're trying to find something for under 500,000, realistically, like what I'm doing for myself is you go on there right now, multiply whatever number you see by 1.2, add 20%. full price plus 20%. So if you see a property listed for 450,000, just multiply by 1.2. You're going to get a number somewhere in the mid to low 500,000s. And that's a somewhat ballpark quick estimate. Should I even go see this house if my budget's only 500,000? And most times you're going to see right now, you normally shouldn't even be looking at most of that stuff unless it's listed way down at the 4 if your budget's up to 5. Unfortunately, that's just the reality of it. If you've gone through most of the sales data and the comparables, this things listed at 4, they're just not selling anywhere near that consistently over the 5 mark. So that being said, guys, we know that this is just an absolutely great, beautiful time to sell. You know how easy it is. It's never been better. So many things that may have been detrimental to your sale in the past. If you're an outside corner lot, you didn't have a big backyard, you had bad waterfront, there was things around the house that you just never wanted to get around to and you didn't have time. They're totally being overlooked, just blown right through, and record prices happening everywhere. It's great to be a seller. That's all there is to it. But the problem is where do you buy next if you're not totally exiting the market and going to a retirement home or moving in with family? And that brings us on to the buyers. This is just a ridiculously hard time to be a buyer. To be a first-time buyer, you basically need support from your parents, or some people coming out of the GTA have great combined incomes with mobile work. But for our local city, our incomes don't support these kind of prices. The average price now, so sorry I skipped this part, but the average price in February was $599,000 in the city of Peterborough, not the county, the city. So that number had been hovering around in the low 5s for a long time. Now this might just be a 1 month kind of anomaly. We'll see if it gets backed by more depth of sales data in the coming months. But we just saw the average price jump about $70,000 in 1 month. And you know, there was still a decent amount of sales that happened. So this is a pretty ridiculous number. If this keeps up, it wasn't long ago. It feels like many people can still remember when the average price in Peterborough was $380,000, and now it's $599,000. You know, almost $600,000. So the big question is, if you're a buyer right now, is this a good time to get into the market? That's what everybody wants to know. So of course, I don't have the answers. All that I do have is hours and hours spent on YouTube watching interviews with some great, intelligent people. Even some by the likes of Stephen Harper and such, that are voicing out what they think's going on right now with not just the real estate market, but our stock markets and the Canadian economy. And I've just kind of distilled what I seems to be the consensus amongst people right now about what's going to happen. So let's get into that. Okay, so most of us have lived through already one major market crash that we weren't directly affected by in Canada, but we watched the subprime meltdown happen in the United States in 2007, 2008. And a lot of people now know and have it fresh in the back of their minds that, you know, things can't go up forever. Asset prices can't just continue to climb. Markets are cyclical. Like all things in life, nothing can continue to grow on an absolute flat line. There needs to be some waves in everything. And everybody's worried, am I going to buy this house at a record price? You know, pay $600,000 for some tiny little brick bungalow in Peterborough that needs a ton of work. And then everything's going to turn around on me. I'm going to lose 40% of my value in a year and wipe out my life's work. And people fear that because it really did happen not too long ago in the States. And so I want to try and paint the picture about what I think is going to happen here in the short term. Of course, way long term, nobody knows. A lot of people are calling a lot of the things going on right now flat out that they are bubbles, calling the stock market a bubble, calling sovereign debt a bubble, you know, America and Canada's bonds bubbles, in our real estate market, not just Peterborough, but Canada right now, saying that it's in a bubble. But here's the thing that I want to get to, and then back this up with some more arguments, is that theoretically they always are, even at the bottom, at the start, when you're just, as soon as you turn out of any kind of price downturn, as soon as you're on the way up, you're at the start of a new bubble. Of course, it's just a matter of where are you in it whenever it goes to turn down. And the question that everybody should be asking right now is not, are prices eventually going to drop at some point? Look, within the next 20 years, there's going to be some sort of downturn. But the question is how much more of a run up do we have before that happens? Because if things go to turn down, how bad does it get when they turn down, and how much of a runway does it have before it happens? Because people could stand to make fortunes at the time in between here, and people that have their money out of the market could stand to just totally become disenfranchised from the housing market, and watch a lot of other people make hundreds of thousands of dollars because they don't have their money in the market in a extremely inflationary environment. And I'm not just talking about real estate, just we have inflation happening everywhere right now because there's so much money sloshing around. So what people need to be thinking about is what is my plan for how long I'm going to own this house? When do I have to sell? How long can I stay here? What can I rent it out for if I had to move out and I couldn't continue to keep making the payments? Because if things do crash in a couple of years, we could see another, ridiculous number of appreciation happen between now and then. I don't want to pin a figure on it because it depends what type of house you buy, but a lot of people have seen almost $100,000 accrue over a year now, and in my opinion that's going to happen again this year. So what we need to look at is what's going to happen in the immediate term and what's your specific plan when buying and holding this real estate. So I'll give you the short of it is that right now I am bullish. I do think that these prices are going to continue to rise, and I've had a ton of conversations with some intelligent people that work for banks, large business owners, just about everybody I can think about. No one can come up with any reason to think why this is going to drop in the short term. In the short term, I mean a year. And so that being said, if we have a full year for these prices to continue to go up, we could see some massive gains in that time that you're holding these investments. So what I want to go over is we know inventory is just scary low. We need a massive amount of it to turn things around. Interest rates are so low right now that the purchasing power of people's money has gone through the roof. And so a lot of people all over Ontario that have, moderately good incomes that are now mobile with their work. We've gone over this with the COVID thing. They can go anywhere and afford really a lot of mortgage debt that they can carry with how low these interest rates are. So one threat that we might have is interest rates ticking up. Everybody would be worried about that, of course. And the biggest thing I think to think about that is that the central banks are really in a bad position right now with how much debt the American, Canadian governments are holding. I don't think that they can stand to see interest rates go up. I think if they're going to do anything to try and soften the housing market, it's got to be in the way of stress testing. And I don't know what everyone else's thoughts are on this, but the governments are so indebted that they can't afford to see rates rise because they can hardly afford to service their own debts as it is, which, by the way, that's one of the number one threats I think out there right now is a sovereign debt crisis. That's what everybody that's really deep into analyzing these financial markets right now is that Canada and the United States are in really bad positions to repay a lot of their debts, and it's just leading to what they're always going to default towards in these situations, and they're essentially printing money to pay off their own balance sheet. So the money supply just continues to expand. So I think what we've got here is that these rates are so low, and for a lot of people, our market is still affordable, and they're going to continue to drive it up until they've hit some form of equilibrium where you take the prices in Toronto, you subtract some sort of tax as an owner for having to do that commute in the event that you ever have to drive back to the city, and they're willing to just max out what they can afford to own detached real estate versus something downtown Toronto and just get in the market at all. So interest rates might be stuck down right now. There's a lot of things going on that it's going to make it hard for the central banks to raise those rates. Canadian immigration is only at like 40% right now. So I just read something right before I started this video, and it sounds like they're predicting that they're still going to hit their target this year for over 400,000 new immigrants. And they've just started in February. Sounds like they're processing, I believe, 25,000 applications. And so immigration's been on a bit of a pause, and still this has been happening. So we know that we have the fundamental supply and demand crisis. We're talking about what are scenarios where we'll see an extreme drastic drop in demand or an extreme uptick in supply, because that's what we're talking about. We need major swings in these two things to happen right now to see prices start to drop. We're not even close to a balanced market, let alone an unbalanced market. We're at half a month of inventory. We need to start seeing more like over 6 months of inventory. So we need hundreds and hundreds of listings to hit the market to reverse the price trend right now, or to see prices drop. So even if things were to start to slow down, we're still time-wise, like you would be able to see this thing coming like a massive freight liner, how long it would take to turn this thing around right now. And that's one thing I want to touch on as well, is that a lot of people who we caught the tailwinds of the subprime crisis over here in our Canadian news, and a lot of people never went back to totally dissect it, but that market was falling apart for years. People were defaulting on these subprime loans, and by the time when everyone saw it in its worst, when markets were losing 40% value from peak to trough, you were looking at streets where out of 20, 30 houses, only 5 of them weren't for sale, because so many people defaulted and walked on their loans and had to leave the state they lived in because the employment was so bad. You had people in Detroit, the automotive industry was hit so hard and totally displacing themselves. You had population movements, you had mass default. And I want to touch on that, is that one, that was a very advanced stage by the time we really caught wind of what was going on here. People noticed how bad their housing market was. You had massive defaults, which so far, from everybody I've talked to and everything I've heard, is that most of the mortgage deferrals that were underway earlier this year, they're being terminated, but payments are being resumed. We haven't had a mass wave of defaults coming on that like a lot of people had predicted. So we don't have the defaults even starting yet. And then once they do start, we need it to go on for a prolonged period of time, and even then the demand would have to significantly drop to turn the tides. We can support so much new supply right now because our Ontario governments have always been so restrictionary in terms of greenbelt, every type of traffic study, every type of you name it roadblock in the way of providing enough new development to house the people that we bring into our country, and just our natural population growth through the birth rate. So we've got population is going to continue to come on. Interest rates we think are going to stay low. We don't have the defaults that they were seeing in the States on the subprime basis when this whole thing boiled down. We don't have those adjustable interest rates that were, had these sort of secret teaser rates and then they exploded to these unsustainable rates after. We don't have that. I think that really the biggest wild card we're dealing with here is sovereign default, a collapse of confidence in the equity markets and just in American and Canadian markets and the dollar altogether, because our governments are so indebted and they can't afford to repay their debts. But even then, with these low of interest rates, where does anybody put their money to see any type of return? We've got 1.6% interest rates, and real inflation on the consumer price index is higher than that. So you're essentially losing money by holding cash right now, or by not borrowing money to buy assets. And then you've got this runaway prices happening in real estate. So where are people going to put their money if you start to have a sovereign debt crisis with the United States? People don't want to hold American dollars in that kind of situation. How much further can Bitcoin go? And there's only a handful of other safe havens in terms of gold and silver and whatnot. And then people are still going to continue to look at land and hard assets. So I think in terms of if you have a sovereign debt crisis and something really, really rocks the financial markets, where people want to pull all their money out of stocks and out of the capital markets, and everyone clams up and just wants to see what happens. We have the herd mentality where everything just locks, stops, and we get a lot of bad news all at once. We see massive drops in the financial markets, and everybody on the buying side tries to just hold up. That obviously will put could put some pause in the blood flow here of this thing. But even still, we don't have enough net new supply coming on to really quickly counteract that. So we're all going to see it coming. I think that all things told, when you factor everything in right now, it's not a good thing by any means. Don't get me wrong, but I think that the way that the governments have left themselves with no levers to pull here, we're on pace for just a mass runaway again this year. I'm not saying it's right or it's wrong, but I'm yet to hear any extremely well articulated argument that states an absolute prediction that this is going to crash and outlines any kind of timeline. Because I'm going to leave you with one final thought, and this is kind of gets down to timing, and that nobody can really predict this, is that you got to remember, this is kind of like, we had a bad day or a bad sleep, when the COVID crisis began here, and everything, you're groggy, you wake up that day, you're just not yourself, and our whole economy started to slow because we had to lock everything down. And then now we've sort of fueled this with some sort of artificial propellant, which is these low interest rates and all the money that's being pumped into our economy, and basically dished out to everybody. And so, okay, I had a bad sleep. I'm just going to have a coffee, and I'll have 2 today, and I'm going to prop it up. Well, you get a bad sleep again that night, and then the next day I'm just going to have 3 or 4, and then you all of a sudden you got this 5 Red Bull a day addiction or something, and your underlying health is really starting to rot out. But you can carry on like this for years before there's really any like total, hard stop implications. And I think that people got to realize is that like this situation is terrible, but I honestly think that it can go on a lot longer than everyone wants to accept right now, because in the past, governments were able to raise rates, and I just don't know if they have that power at this moment in time. And so unless they get really creative and really intricate and tactful and targeted in putting some kind of localized taxes on real estate, or just some sort of disincentivizing of purchasing without raising rates, similar to what they did with the foreign buyers tax in 2017, and then really promote some legislation to up new unit production and quickly get stuff online, I just think we're going to keep going. So anyways, sorry for the long run on, guys. This was a big one. In the next further videos, I'm going to try and focus a little bit more on buyer and seller strategy stuff, because I know you guys want to hear some of that too. Let me know your thoughts on this market. Please, if I'm glaringly wrong on anything, let me know. What I want is the truth. It does not matter to me if these markets go up or go down right now. What I want to be able to do is to advise my clients appropriately about whether now is a good time to buy or sell, and whether the market's going up or down. There's transactions in our business. So I'm not out here to try and sell anybody on the fact that this market's going to go up. I truly believe it's going up, at least in the short term of what I'm going to call a year, and nobody has the ability to predict outside of that accurately. So let me know your thoughts. Please, if you're going to put an opinion forward, back it with some sort of substantiation behind your argument. Let's get the discourse going. Let's keep it rolling, guys. Just want to have a bit of a community here, and the more good ideas that come to the table, the wiser we're all going to be, so that we can, act accordingly, spend our money wisely, and help advise our friends and family to spend theirs wisely as well. Thanks, guys, and hopefully we'll see you next month, and I don't miss another video. I really like getting these out, and I look forward to talking to you guys soon. Take care.